Things going here, folks. Welcome. Thank you so much for taking the time out. We've been getting so many questions about the indicators and everything. I wanted to do this, but before we get into this, I'm going to bring up the next page. And you may not know about me, just for the folks that are coming here for the first time or watch the replay, is I'm not just the regular guy who is on YouTube looking at stochastics and MACD and what have you, looking at typical indicators. What I am about is I have been in the markets for like 43 years. I've worked with thousands of investment advisors for the last 2 decades, helping them manage their customer money. We've ran about $275 billion through our modeling process over the years. And one of the reasons I've been wanting to do what we're going to do today, which I'm basically opening up the black box to a point. I'm going to show you a lot of routines that are being done inside of our software, the trading models, all that stuff. But I just want you to know, this is a screen I have up here is my history, only the 2011. There's another page, but I figured this was enough to make my point. 79, started Chicago Board of Trade. Best thing ever happened to me was lost my money. And I have to tell you, I think the best thing that's happening right now, I think for the most part, I'm not reveling in anything that's happening right now from the standpoint of what's going on in Bitcoin. I see some comments there, we're at 18,000. I think there's a huge lesson being taught in these markets. And every one of our generations, we've had some sort of debacle that erased a lot of capital. And there's a lot to be learned from that. So in 1979, that's what I learned was, you get emotional, you get too involved, you get caught in the markets, and bad things can happen. And out of bad things, those are opportunities to learn. So don't take too much. If you're young and you're taking a hit here, I'm sorry, but that's also, if you study, you won't have to do this again. And this is the point of bringing out the indicators. It's really me giving back to the community, giving kind of my legacy. I've used these indicators exclusively. I don't look at any of these standardized indicators, stochastics, or anything. I don't use, I use simple moving averages. I've been doing this a long time. And once you've managed to get something that works here, you just kind of, best way to put it is that you stick with it. And I tell everybody, and this is part of this, becoming a high percentage trader, is finding what works for you. I was lucky, sort of lucky, after my debacle on the Board of Trade. And between 81 and 84, I was on a real mission to figure out how to eliminate emotion, all kinds of things. So we're going to go through a lot of details here in a minute. I'm going to reveal what I call my 3 secrets, and we'll go through a lot of detail before we start getting into the indicators themselves. I think it's important. I don't normally get an opportunity to talk about things like this, so this is really the crux of what I've been able to do in my life's work, and I want to share some of this stuff with you and hopefully be able to help the community to make money. I hate when people say, I want to be honest with you. I'm just being very frank with you and telling you exactly the things I've learned, what I try to show you on the YouTube channel. I think most of you that watch the YouTube channel know I'm a bit different from that standpoint of what I do and how I do it. But, I went through, not only have I developed my own proprietary indicators, we started in 1986 through 92 developing models, and as technology started to evolve, so did I, and we really built some very robust strategies that have stood the test of time. They've been tested in the trenches since 1998. We've been running our VPM, which stands for Virtual Portfolio Manager software, and helping investment advisors to do that. In 2020, we first time we've ever done anything with the retail community. And I have to tell you, you folks are awesome. I've met a lot of you. It's been really interesting. You know, folks that reach out and very persistent. Anyway, you know, there's when you have, and it's not that my channel's that big. We have 31,000 plus. But the point is, there's a lot of activity, and I have a lot of engagement, I think, for, and I look around other channels. So I appreciate all that. But I've developed 3 different platforms of software, and they're very sophisticated. There's a lot of stuff that we've done, a lot of math. And what I'm hoping to do here today, and I'll talk to you about this as we go through the seminar, is that you have to build a belief system. And I'll go through some details on how to do it. So I'm going to, we'll just kind of move forward here and get into the crux of what we're going to do here today. And make sure, the whole point of this, if you don't have the indicators, then get them, because this is, for me, it's like oxygen, right? You got to breathe. And without these tools and indicators, it's really difficult. And I know a lot of you that already have the indicators. I've already seen great comments. You sign up, you also get to come into the live trading room. It's 3 days a week, Monday, Wednesday, Thursday. This week is a holiday, so we have a little bit of a shortened week, but you get to come into there too. So that's like an extra, that basically depending on how you want to look at it, the indicators are free. You're getting an equal value to coming into there. And I think a lot of folks have come in there and stayed in there just to continue, because it's both a learning experience, setting up trades, there's all kinds of stuff. And we're going to do some simulated trades today. Nice thing about TradingView is they have a little recorder. You can go back and replay the bars. So we can go and stop, and I found a couple of charts that I want to go through. We'll even do some random ones that I haven't even seen. I'm fine with that. So that'll be at the end. So you're going to want to stay to the end. And yeah, anyway, I just noticed a quick comment. Just send us an email. I don't know why they would disappear. They shouldn't disappear. Anyway, yeah, let us know. Send an email to info@Kendall Report. Watch your vision. Okay. All right. So let's go ahead and talk a little bit about who this is for. It's for any level. I'm gonna show you whether you're novice, intermediate, advanced, you're day trader. Day traders are probably going to learn the most in the live room, and I'm going to show you the day trade setup. What I'm planning on doing, I'm going to go through each one of the indicators today, but when I do that, I'm going to talk a little bit about their origin, how they were developed, and what they were developed for, and what answers they were trying to give me in the process. So there's a total of 8, 9, how you count them. And of course, you guys see the PPMs and the market grid. We're going to go through all that. But this is for anything, even crypto. I can show you this Bitcoin situation, was very identifiable. And, so we'll go through all those details here in a short while. So let's go ahead. Let's talk about the 3 secrets. And and secret 1, at first when you see it, you're going to think, oh, I've heard this before. But I'm not only going to talk about the secrets, I'm going to talk about how you can achieve and have this secret so you can be one of those traders. Secret 2 is what separates the pros from the amateurs. And secret 3 is what I learned from the trading pits. And it's one of my favorite stories to tell, secret number 3. And sometimes I've done these things in live streams and just kind of randomized, they kind of slide in. But for the most part, I'm going to focus on these things that are going on here. And I think you're going to find this really interesting. So let's just dig right into this so we can get through this section and get to all the technical goodies. So overcome emotions. Everybody, yeah, okay, right. journaling to success. So I'm going to go through each one of these things just for a few minutes. I talk about this in the live trading room. This is like super important. There was a guy, if you've ever looked at the Market Wizards book, there's a guy named Ed Sakota. I was invited to one of Ed's first meetings in Lake Tahoe. I used to live in the Bay Area in San Francisco, and we went up to Ed's house. There were 10 of us, and I'm just going to tell you this quick story, because what we did was we were told that we had to bring our last 10 trades and go through them, good or bad, win or lose, and we had to basically show our strategy and what we were doing. So we got to have handouts, and everybody did a presentation, and through this, what we did was everybody would say, okay, here's my trade set up, here's my entry, here's my exit, all of that stuff. And what came out of this whole weekend, I won't tell you about the whole weekend. I could do just a video on that. What basically came out of that was when you're critiquing somebody, you're learning. So when it's the same thing when you're journaling, you're critiquing yourself. And I think that's a important thing to understand. And because the funniest thing is number 3 on this sheet, which is funny, is learning how to fade yourself. So that's one of the things that I would say I learned, that combination of trading floor and some other things, and identifying emotions. So, but the journaling is important, because you want, ultimately, when we get to the next some of these phases, is you want to set up a trade, and you have a typical entry point, exit, and maybe a risk point. Try to set up risk reward ratios. All that stuff is good, but in the real world, once you enter a trade, all the dynamics start to change. They're not static anymore, and that's where most people make mistakes there. But usually, at some stage, you get emotional and you start to feel things. So I always say, pay attention to this tightness in your stomach. And when you start to get that tightness, something's going on that you're identifying. And this is what came out of the Ed Sakota thing, was that what happened was when you start to get that tight feeling, you have to go in and you journal about the trades. When those things happen, start to identify mistakes that you made. So let me give you an example. So let's say you go in and all of a sudden the market goes against you, you stop out, or you just X out of the trade, and you're sitting there going, and as soon as you get out, it goes back up. And you're like, I can't believe it. How many of you have had that trade up? All of us, right? So what you do is you have to identify, you want to go back and journal, and you want to identify what was going on right there if you can. And right after that trade, if you're in the middle of a day trade, you just want to try to, even if you stop to identify it, that's important. The other thing that we did at the Sakota meeting was that we would talk about if you had hunches about the market. So let's say you don't even have a trade, and you're sitting there and go, you know what, I think this market's going to go up. It's going to rally here. I see these comments on my channel all the time. I'll do something, and somebody will take the other side and go, hey, dude, this market's still going down. There's a lot more to go, blah, 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 whatever. So what you do with those kind of comments is you actually write them down, and you start to identify whether you're more right or wrong. So let's say your hunches end up to be really right, but you don't act on them. So what you want to do is, once you start to get the context that you understand that those things are happening, that is exactly what you want to identify. And so then you can start to take action at some of these points. So when I talk about identifying emotions, are kind of tied together here with the journaling, is trying to recognize when you're getting that feeling, that really tightness. And I was talking to somebody on the phone the other day, and I told him, what you have to, I'm going to give you all the same tip that I gave him the other day on the phone, is that what you have to realize when you're in a trade and you really have this strong feeling, and you've identified that this market should go up or down, whatever the trade is, and you put it on and it's going against you, and you get really tight, and when you want to sell, let's say it's a long trade, you want to sell out, you actually buy more right at that moment in time. And all of a sudden, that same scenario where you bought and then you sold out and it goes up, now you've counteracted that. And that feeling, especially on day trading, this is, those of you who've been in the live room, you've seen that reaction by me. It's like, okay, I bought it, it's going down, maybe I'll just scale into it, and then it pops up. Two things happen with those kind of trades, and I'm going to talk about some strategies as well today. But a couple of things that happen is you average down the trade. You don't have to go back up as much to get profitable when you do that trade. And of course, if the thing's collapsing, you also want to have some setups there, but you know what I'm talking about when these things happen, once you've identified them. And that's the point of journaling and having this. And that's actually tying together step number 3, which is learning to fade yourself. So when you want, it took me a long time to figure that out. I'm starting to get really nervous. The market's going to go down. Oh boy, it's really breaking. That's when I buy on day trading, right? I'm buying when it's really feeling like it's starting to surge down. Now in the current market environment, some of these surges go a lot further than they have. You get these spikes. So, if you signed up, you've been in the trading room, you know that you'll see these type of things, and we can identify them both with, there's a number of things that I'm going to show you in techniques in day trading. So my plan is, as we go through all this, is at the end, I'm going to show you how to set up and how to anticipate some of the trade setups. So this is going to be a couple hours. So get the room and get the coffee out. It's going to be a little while to get through this. And we may take a break at some stage to do that, just a brain break for maybe 5 minutes or so, just to move the legs a little bit. But the last thing is, once you've identified all these emotions and you start to learn these things, you start to get to the final page. I thought I was just looking, I have a coffee cup that I inspired back at a firm I was with. It's called Delphic. Discipline, organized, focused, and confidence, independence and confidence. And confidence is what you have to pull the trigger. And once you get all this stuff and you start pulling the trigger and reacting in the right way, and then you've got it. So part of the other journal is, and I'll tie this all together as we go through this presentation. Part of the other thing is, once you've done a trade, is the debriefing after the trade. So you have the setup, here's where I want to buy, here's my stop loss, here's my objective, and then you go back and basically debrief the whole trade. What happened? Did you achieve your goal? Did you get stopped out? What happened? And really go through that. You do that for probably 30 to 45 days, and then you can start to get into the point where you're doing this stuff mentally. And I made a joke in the live room the other day. You don't want to be sitting in a room by yourself trading, cursing at the screen and getting all emotional. You want, and if you're doing that, then you just have to identify what your emotions are. I was sharing with somebody, when I see red in the timeline on day trading, I keep in my head, I'm going attack the red. So buy more. And whether you're trading micros and all that, I'm going to show you a couple of techniques here. These are things that I talk about in the live room a lot, and you can see real time and happen. That makes a big difference. So secret number 1 is very clear. We all have heard this a million times, but I'm sure people have talked about, we have to get emotions. Well, it comes up with something that we'll talk here a little bit, having a trading plan, right? So that's great, but what if your trading plan is no good? So you're disciplined, all right, but you don't have the right trading plan. So and I can tell you right now, discretionary trading is the hardest thing hardest job you'll ever have. And it goes to me. This is why I built Logic. This is why I built trading strategies. This is why I built a portfolio manager that could trade hundreds of stocks at the same time and balance them within a portfolio, because these are very difficult tasks. And ultimately, what I'm hoping to get out of this for you folks today that are taking the time to watch this is giving you that context of how you can start to apply these techniques into your trading and get better. You know, when you get good from a good day trader, don't have very many negative trades. One of my old mentors used to, his motto was, "I hate losing money." He said, "Never go home with a loss if you can avoid it, even if you have to spend all day to get back even." Especially, this was from the floor trading days. So let's go ahead to secret number 2, and this will unpack all into one basic story is what I planned. And secret 2 is the trading plan. Okay, so this is what I was just alluding to. And there's 2 screens here. There's quite a few steps. And I'm going to do high-level understanding of these things. And then when we get into the indicators, we're going to start to show you some things. Because this is what you have to do. And I would argue, even with, no matter what you're doing, you have to ultimately, and I mentioned something that I believe comes in on the second phase, but I'll mention it right now, is what you're really doing by having a trading plan, what you're doing by journaling, what you're doing about doing all of these things is building something. It's called belief systems. And I'm convinced 100%. I've worked with myself, investment advisors for over 2 decades, and even before that, individual investors, and being one myself, is you have to believe in what you're using. So my goal here today is to show you these indicators. These are the tools that I built, and I've never changed them. These things were built, you'll see, back in the 80s, some in the early 90s, but for decades ago, and I haven't changed anything because I haven't had to. So I have a very set vision. I have blinders on, so I'm just always looking forward at that phase, and I'm not ever doing anything outside of that box, ever, okay? I don't look at any other indicators. I don't go, gee, I wonder what stochastics look like. I don't do any of that stuff. I use what you're going to see on the screen. This is my toolkit that I'm giving to you, and this is an opportunity for me to actually go through and talk about some setups and go into a little more depth. So this trading plan, this is the crux of everything, but you have to, the whole first part, secret 1, was eliminating emotion, and you have to start to identify these things. And then now that you've done that, you have to figure out what is your plan. And it could be anything. You know, we're talking specifically about my set of tools today. But this is something that we're going to be able to, I'm going to show you, because I've done it for over and over and over for decades, how to do this, right? So first thing, you have to decide, am I a day trader, am I a swing trader, am I a long-term trend trader? I'm going to ultimately, at the end of this presentation, I'm going to go through all of these techniques. I'm going to talk about the big trend and how to identify trends using the PPMs and the moving averages that I use, and all of these tools are all going to come together. But I think it's important for you to have a belief system that you understand where my belief system came from and what is actually possible with these indicators. And I think I've already seen folks coming up with some great ideas. That's the beauty of this. And I've been the only one using these indicators, by the way, for 30, 40 years almost. So now I'm putting them out in the public, and the feedback we're getting, and I'm hoping that at some phase we get some serious traction on these things, that we build a community that are actually going to really shred these things and come up with way more ideas than I have. I basically tell everybody, if you are lucky enough, and this goes with the trading plan, to figure out maybe 3 entry techniques and a couple exits, and you always do those, you don't do anything outside of that, that's your trading plan. Whatever it's figured out, and you're gonna see here in a minute, we're gonna talk about validating these things, doing all of this stuff. So I'm not sure what you folks thought you were getting into today, but this is really bringing in, I think you have to have these general philosophies. Most of this stuff has already been out there. You probably already know a lot of these things, but I'm giving you my perspective on them, which is going to tie together with using the tools which I'm selling to you. And so so you got to decide on time frame. I think you can do both. If you have the time, you can be a day trader. If you're working, you don't have the ability to sit around the screen for a while, then you're going to have to, be a swing trader or maybe a trend follower. So there's a number of things. We'll touch on all of that. Find a set of tools. I'm showing you a set of tools. You may be able to take same concepts and ideas on tools that you're using. This is a free seminar, so you can do with this as you wish. But it's all ultimately going to be around doing the techniques and understanding the things that I have done for so many years. And this stuff is second nature. A lot of times, and I'll just tie this all together, you talk about the levels of competence, right? So there's the lowest level is the unconscious competent, right? The person doesn't even know they don't know what they're doing. Then there's the conscious competent, knows that they know what they don't know. And then you get to the next levels of conscious competency, or you know what you know. And then there's the unconscious and competent, which is the person, that's the zone for athlete. That's when somebody gets into the zone. And once you do this for so long, you get, you know when you get into the zone and when you feel it. You should always be at competent level, the conscious competent, and you're going to know when you step into the zone. And I see times when those of you who follow me where all the techniques, everything's just flowing. I've got multiple days, 5-6 days, sometimes a month or more, where all of the general ideas and concepts of what the markets are doing actually happens. There are other times when markets get very noisy, they don't follow any rules. There's just lots of volatility, lots of noise, and maybe in the case of what we saw last couple of weeks, we see moments of completely illiquidity. So we're talking about the 2022 markets, but they're not any different really than any other markets I've been involved in. The nice thing with the digital world, we can actually see what's going on. In the old days, if we were setting off floor, all we saw was a price quote, maybe an indicator, maybe a chart. But now with level 2, we can see a lot of in-depth of what's going on. It's the virtual trading pit. Especially on the E-minis, they're highly liquid, a lot of activity, trading millions of contracts per day. And so you've got a lot of visibility and transparency in the markets that we never had before. You folks that are young folks that are out there, this is an amazing world we live in. I've grown up, when I started in the markets, it would take probably 15 minutes to put an order in. You had to call the clerk, or if you worked at a wirehouse, you went up to a window, gave them a ticket, they typed it in, sent it to the New York Stock Exchange, that sent it to the runner, that took it to the specialist who executed the orders, and then signed off an order, gave it back to the person, went back to the desk on the New York Stock Exchange, and then sent the wire back to the office that handed it to you. That was like 20 minutes for a market order. You kind of knew where you were from watching the screen when within a minute or two, and you were constantly asking for time and sales because the order looked like it was way off the mark. It was a nightmare. We don't have that anymore. We have this digital world, and we get instant gratification. We click on it, nanosecond, we're filled. Our order book, we can see right what our account's doing. So we have a much different setup that we have ever had. So you folks are incredibly lucky that going forward, I suspect transparency will even get better. So this is everything I'm talking about, because this is the step, is you got to develop a belief system. So you got to have the set of tools, you got to figure out who you are, you got to start to build what that trading set is going to be. And I'm just going to tell you that this is the hardest thing to do. If you're doing this on your own, you already know this. It's incredibly hard. to start to build some kind of set of rules, and it's incredibly easy to violate them. And we're going to get into the validation and some other aspects. There's a pretty good book. I'm going to get the name wrong. There's a couple of things that I've shown this book before. Let me go full screen so you can see this. You can't see it. There it goes. Woulda, Coulda, Shoulda. It's by Dr. Arthur Freeman and Rose DeWolf. It's an older book in the 90s, but it's a great book for helping with belief systems. They reference stock traders all the time in this book. It was a self-help book. Might help you with some other issues in life. Who knows? But it's overcoming regrets, mistakes, and missed opportunities. How appropriate is that for us traders, right? So this was always my reading material. This becoming a high percentage trader. I was doing this seminar. I haven't done it for years, so kind of an updated version. But this is what I used to do back in the 90s when I was teaching individual traders, and we had Market Mind, and we were working with TradeStation and Supercharts back in the early 90s. I was actually the very first guy to offer third-party software into TradeStation back in 1991, 92 when we did that. And Bill Cruz, the founder, and I sat down over a glass of wine in San Francisco in 1990 and struck a deal to do a strategic partnership at the time. There's actually user studies in TradeStation that I wrote that are still in the system. But the point is that you have to develop this belief system. You have to be able to learn from those mistakes. And I guess this is what I was saying about the current debacle that's going into markets, is that they're just erasing a lot of capital. It's just dissipating on many of these things. There's nobody on the other side. It's just a vaporization of capital, and it's an opportunity to learn. And I know some of you have taken hits in the markets, and that happens. And you just take it as the school of hard knocks, but more importantly, things to learn from what you didn't do, all kinds of things. And I've seen things. I'm pretty famously, I'm sometimes not I can be a troll on Twitter. I've been into several Twitter wars with some economists and people that not because they're bad people, just they were just saying stupid things, in my opinion, right? So, but all of this stuff and developing the belief system is really important. So this is where it comes down to once you start to develop your rules. So we're going to go through rules. You need to have entry rules. What are the setups? And I'm just going high level here at this point. You want to identify risk. And I hate, by the way, I'm just going to put this out here. I hate anybody. So why only risk 7% on a trade? Well, I suggest that you, and we'll talk a little bit more about this later, I suggest that all the trades that you set up are based upon market patterns and where the market is likely to trade within your context of your bigger idea, than trying to just put some random percentage number. I've seen advisors, well, I just buy positions, I only take 10% risk anything. Well, trade goes down 11% and then goes up 30. So how'd that work? And you don't want to use those type of stop, and that's not money management. That's stupid. Okay, I'll just say it. That's not money man. That's not what money management is. We're not going to get into portfolio strategies. My plan is, folks, I'm doing this one today. We're going to be doing a webinar on Wavetech and then on PortfolioXpert for those, because this market is going to bottom one day. And when it does, you're going to want those tools. You're going to want to be able to participate. Those of you that are around in 2020, we printed a lot of 120, 140% gains in 2020. If you were you were coming around in, even in June, I think the Warren Buffett trade that I did when Buffett sold the airlines, we built a portfolio to buy them on a short-term basis, made 110% in 2020, just off the airlines, off 9 stocks. So you're going to want that. So I'm going to be doing some other series like this. And this is an opportunity for me. The real goal here is to try to help you folks formulate what's going to work for you in the context of some of the things I'm going to tell you and some things that you're going to have and techniques that you picked up and that you already have some skills that you're going to be able to apply to this tool set and things that I'm talking about today. So the risk is important. Don't do the percentage trade stop. That's just silly. Not a good technique. Profit targets. This is a really important. Profit targets are important because you do want to have an expectation of where the markets are going to go when you're trading. And if you're doing that, you also want to have a technique to update your expectations as the market reveals more of maybe a new trend or the magnitude of a trend. All of those things you want to be flexible. These aren't hard set rules. And that's the same thing even with risk. You may get into a trade that you originally designed to risk, and all of a sudden you realize inside of that context of that trade, whether it's minutes after, if you're day trading, or if it's days or weeks, that you realize this trade's not going to work. Not that you were wrong. It's just not. I don't look at being right or wrong. I look at everything's probability, and sometimes the probabilities change once you get into a trade. The trade that you thought you were in isn't the trade you ended up in. And so you have to have that flexibility to be able to move out of that trade and maybe let it go down and reset the whole expectation again. Too many people go, okay, well, I've got my stop, and they just sit there like a deer in a headlight waiting to get stopped out. And they knew 2 days ago, 3 days ago, if day trade, they knew 20 minutes ago, the market, they're probably going to get stopped out, And I get frustrated even at myself when I do those kind of things. It happens. We're humans, okay? And so this discretionary trading thing is what we're talking about, is a very, very difficult situation to be able to put yourself in, and trying to constantly updating and being flexible, doing all these things and being a trader. Like I said, hardest job you're ever going to have. So profit targets are important. I'm going to show you some tools in a bit here and how to deal with that. Position sizing is number one. And that was, so I'm just going to tie it together. I'm going to talk a little bit about the things that we did in Wavetech and then ultimately in PortfolioXpert. Is trade sizing was important, and because we had X amount of money and so many ideas, so we had to figure out how to position them within the pie chart. In the case, most of the time when people are talking about position sizing, is how much relative risk you can take on these trades. And these are all very complex ideas and concepts. There are no simple solutions. There's nothing here that you just go, oh, well, this is the formula. If someone tells you this is the formula, maybe there's some good ideas out there, but it's very individual to everyone. Maybe one person's trading minis, another one's trading 100 contracts of E-minis. So it's about dollar movement and all of those type of things that you have to monitor. So I think I'm going to show this to you. I'm going to make a note to myself on this next step, intra-trade tactics. And this is a huge element. And I often talk about, I'm just looking at some notes I have here, also often talk about trading in tranches, having like 3 tranches. And I'm not going to go through that technique at the moment, but you want to have something. I'll talk about what the technique is that you trade the 3 tranches, you would put on 3 separate positions. And as the market moves in your favor, you're scaling out of the trade. One of my mentors, those who've been in the live room heard this 1,000 times. One of my mentors said, you set up your trade, and by the time the markets get to where you thought it was going to go, you should be out. And sometimes, and I came up with that, I took that seriously for a long time, and then I worked on a technique to allow positions to run with in the context of that concept. So concept is market moves up, take a partial profit, and now your relative risk, because you've got a third of the position has just taken a profit, you've mitigated some of the risk in the trade. And the goal, number one goal in every trade, is to eliminate risk. And you can't do it if you're just trading one of something. The beauty is we now have fractional shares. So even if you're a small trader, you can do this technique where you can sell a third of your position and you can scale out, whether it's whatever you're trading. So this has made the world way, way different. So you can do this technique within. So you want to sell out. Let's say we buy, it goes in our direction, we're selling a third. Boom, we sell it. Just maybe there's a shorter term target that we got when we use the indicators. Maybe we got the fib projection tool up, whatever. We're taking a partial profit. Now I've eliminated some of the risk. If it turns around and it hits my original stop, then I have less of the risk that I originally designed. If it goes to the next level and it hits my first target, I take the other third out, and then I immediately go to a break-even stop. And so now I'm invincible. I've locked in 2 levels of profit. If they allow you to do this, you get 2 levels of profit. And now the third one, you can start to be that flexible, starting looking at the target. Is it extending? In the case of what I'm going to show you today, are PPMs, are the trends getting stronger? What's the characteristics here? And so you can start to really expand your trading. Number one goal, eliminate risk. Number 2 is lock in profits. Once you take that second trade off, if the market's going your direction, you go to break even stop, you can't lose. It could gap below you, I guess, if it was an overnight situation. But for the most part, you're not, especially intraday, day trading, you're not going to get caught in trades where the market's just going to flip on you and take over. If they let you get out, and you have to be very aggressive to do those things, but you're just constantly doing that. And I talk about it all the time, singles and doubles. You don't have to hit home runs. If you're a day trader, singles and doubles. You can accumulate a lot of money in a trading session, just singles and doubles. Sometimes they give you get lucky, you get in, and a big spike, especially in the volatility levels that we're dealing with right now. So that's the intratrade tactics. Okay, so part 1 of secret 2, which is developing the plan. And so these are high-level concepts. So we're going to start as we get into the indicators. Once we review all the indicators, now we're going to start using the indicators in the context of what I'm just talking about right now. Okay, so secret part 2. Excuse me 1 second here. So secret part 2 is the validation of the plan. And once again, the whole point of the first part, and these are high level concepts. So we haven't developed any kind of plan yet. And I'm just telling you, if you're going through this, you're going to find this a very difficult task. There was another book I was going to mention. It's an old book I written in 1992 or 3 by a guy named Robert Pardo, and I think it's Trading Systems. Boy, I was just looking at it last night in my library behind me, but I was unable. I couldn't find it. I was looking through my books last night. I know I have it. It might be at my home library, but it's a really good book for validating and doing that. So that's something that you can absolutely put together. Help to put together for building a system, even if you're going to use my suite of tools here, or you're doing your own, whatever you decide to do. but that's really important. So here, let's start talking about, let's say we've developed the rules. Like I said, these are high level concepts that I want you to understand. And then we're going to develop these things as we go through this seminar. So the concept here is you got to validate, once you come up with all the first section that we did in part 1, then you're going to have to come up with validating the plan. So I suggest that before you put real money in, do a trade simulator. These things are very sophisticated now. They're very, very good places. And if you commit yourself mentally hard enough, you can make it feel like real money. And so you trade with seminars, start trying these techniques. And then through that, you would put, some amount of money in the simulator that would emulate maybe what you have and just see how you do. Maybe you do a 30-day test. This is not anything that you're going to do in these markets. You're not going to learn overnight. I built my first trading models in 1980. If I went back to that screen that I had up earlier, I built my very first trading model. It was a one-factor trading model. It was a 310 oscillator system. And it was very simple, but it worked. I ran my entire business off of it for 4 or 5 years, and it eliminated emotion. It was super simple to do. It was called a TRS, trend reversal system, and I won't go through the details, but I ran that from 1980 through around 1985 was a model that I did for myself and for my clients. And I was the guy that I traded for individual clients and myself, and I did all the trades that I put out to my clients. There were no trades that came out to my clients that I didn't do. That was mandatory. And being a rep at the time, I had to be the last one in and the last one out. So I had to get everybody out, put their order in first, then put my order in. So, but the idea here is you want to figure out what the effects of what you're doing. But here's where once you start to once you validate, and this step is maybe a little out of, as I look at it here, maybe better. But then we're going to skip, once it's validated, start live trading. But I'm going to skip that. That should be at the bottom. Checkability for you to execute your plan. How well are your entry points going to where you thought, where you're getting your entry points, where you're coming in late, where you're early? Start to validate, back to journaling, all of this stuff. If you really are serious about doing this, like I said, this is the hardest job you're ever going to have, because there's emotion, there's technique, there's science, there's math involved. And and the whole thing, what I've been trying to put together here is, once you've got all of this stuff together, then you have the confidence, you have the belief system, and once you start to believe your math, you can do some amazing things. And I can tell you, I started to believe our math back in 1986. And, I had, in the 87 crash, we were short coming in 3 days, about on Monday, Tuesday of the week before the big crash. We came in and we're shorting all kinds of stuff, doing crazy spreads. My reward was a nice 1987 turbo Porsche, 930 Porsche I bought, and my sales assistants that worked with me at the time called it the Batmobile. But once you get the confidence and you start to put trades on, you can do absolutely amazing things. But you have to have all these things to be able to do this. And so we're going to skip and come back to once validated live trading. That should be actually the last step here. So check the ability on the entrance. How did you do on risk? If you're doing the 3-level trading that I just talked about, were you able to execute that strategy? Even if it's a swing trade, maybe a trend trade of some sort, you can do that. The way we do it within our software is we use daily and weekly models together, so that the daily tends to play in the really strong short-term modes, and then scales back the position, so you're ebbing in and out as the market gets strong and weaker, and ultimately, you get out of the intermediate trades. But the point is that it's the same kind of thing of changing your position sizing and adding to when the markets are short-term strong and then pulling back. In the case of the 3 tranche, taking those profits and swinging through those as you go. So when I get done with this, actually, this is a lot of concepts here that I'm throwing at you. Maybe some of these you've heard before. These are just things you need to have and do. And this was the goal today, is to get these type of concepts out to you. I know this is just secret number 2 we're on right now. And this is part 2 of that. But the whole idea is how well did you do, doing this? Here's trading in tranches of 3 that I already talked to you about. All of this stuff. Are you able to execute the plan? And if you can't, then you go back to, you don't go live. You keep perfecting these and journaling and finding out, why am I coming in late? You just have, this is hard work, and you have to do that. Like with the software and our modeling, what we did was we developed this thing called an ER ratio, or the effectiveness ratio of the signals. So we started, rather than trying to scrutinize the signals to the point like a lot of people do that build models, whether you do it in TradingView or whatever you've done it in, whenever you do that kind of math, you're trying to come up with something. There were times when symbols didn't do very good trading. There were times when they did amazing. And we found out that if you then connected the technical with fundamental, you could start to bring in stocks that were more likely to have better attributes in windows of time. So that's for the PX, or the PortfolioXpert and Wavetech seminar. But there's so much. All we're talking about here today is basically, ultimately, day trading. We'll talk about the ability to recognize swing trades, and then the last is getting into trending and understanding what's going on there, being able to stay with trades longer. And that's basically the swing trades are, for the most part, our daily models. The trend trades are our weekly models. We actually, in PortfolioXpert, have secular models, or monthly, so they have much longer term holding periods. But all you're really trying to do is to take all of these techniques down and do this. And for the most part, outside of day trading, if you can't, this would be my argument, if you can't take the rules that you've put together and put them into computer code that's hard coded, says if this, then that, you probably don't have a trading plan yet. Until you can actually write it down to that level where, A plus B equals C, you're not going to be able to get beyond just random speculating. And that's when we built the models. That's why we built the ER ratios and started to look at overall tranches over time and different characteristics of modeling versus a individual stock, because we do those type of ideas on every stock. So this is, which brings me to one of the key points I have down here, is the technique that you maybe are developing may not work across the array of a lot of symbols. There always going to be symbols that aren't going to map out very well with your ideology or your trading plan and all that stuff. So you want to try to find those type of things that work with the plan. And that's what we did on the software side. Okay, so I don't want to get too far over there, but on this stuff, you have to make sure, typically, since you're individual and you're not going to be able to automate a lot of this, you're only going to be able to trade a few items at a time. And once you get to identify your little suite that you're going to trade. I know I've talked to people on the chat here before, is that what you really sometimes, maybe you trade 2 markets, 3 markets. Back in the trading floor days, you traded 1 market for the most part. You might put some trades through a clerk on a couple of things, but you were trading in a pit. You had blinders on. If you were in the Cisco pit, like if you were in AMD, which I spent some time in San Francisco in different trading pits, then that's what you do. You don't do anything else because you can't look at anything else. Okay, so that's Secrets 2, which is developing a plan, concepts and ideas on how to do that. It's almost, in this case, these are things you have to do. And I can tell you, I did this a long time ago, and I actually think if you've had, I would just say if you're having a tough time, especially if you're a crypto trader or something right now, and you're finding out that that's really not a very good strategy, and that's why there's so many memes about it. It's never been a good strategy. Warren Buffett doesn't do it. Nobody does it. Everybody's trading in and out of stocks. There's billions of shares changing hands every day on the stock exchange. Nobody's buying and holding. And, if you see some of these people that show up on CNBC, these advisor types, and these people, I've never seen anybody on there that I would give a dime of my money to let them manage. So I won't bring up names, but there's just a lot of stuff. You have to, this is an individual thing that I'm talking about today. This is discretionary trading. This is something that you just can't, you can't teach a lot. You have to learn. You have to go through this process that I'm putting here. This is what it's going to take. My old joke when I was a rep, I used to joke it would take $1 million and $1.5 million of losses to figure out how to trade of other people's money, because you couldn't afford to get through the education. It was very expensive education, and that was for people that cared. I worked with a couple of people. They were just looking for the commissions. They never planned on making any money because they didn't know how to make money. They just knew how to tell people they might make money and take the commissions and run. And my goal was, literally back in 1980, was to develop some kind of mechanical system to eliminate any type of emotion I could, because I experienced a lot of that. So, okay, so let's go to secret number 3. And I think let's see how we're doing here. We're an hour in already. Okay, so I said a couple hours plus. For what I'm going to do, this we'll probably take a 5-minute break when I finish secret 3, and then we'll get into the rest. We're going to go through the indicators one by one. That shouldn't be too long. Where we're going to spend the most time is actually going through and applying the indicators. I'm going to actually apply each one as I discuss what they are and how they work and all that kind of stuff. So we'll go through that. I'm just looking at a couple, and I'll look at some comments here when I finish 3. Maybe we'll do a couple Q&A. There's not a lot of folks on the Twitter, but there are some there. But ultimately, if you are following me on Twitter, if you go to Twitter/PortfolioXpert, we can do some Q&A on some of this stuff. We could probably do the 2 hours just on this high-level concept of doing things, but we're going to get into this to do a full master class. We're looking at multiple days. We're considering doing some sort of even online conference or actually doing a physical conference. I would like to do the physical and have a big conference, all of us get together. It's nice to know we can get together as humans again and put the the last couple of years behind us. So, okay, let's get into secret number 3, what I learned in the pits. And I'm going to tell you the main thing I learned was price discovery and how it works. And if you watch any type of trading, like on a level 2 trading, and you watch order books, those of you been in the live room, I depend on the order book to see what's going on in the market. So it's kind of strange that I can still hear the pit. I can still feel the flow of the market. And, I was watching, just like in a trading pit, if it's a fairly large pit, I spent some time in the Treasury bond pit in Chicago, and a very big pit. And there's always a couple big players, some of them institutional types, some very large individuals back in the day, especially back in the 80s, guys like Tom Baldwin, and they were huge traders. And so you get a really good feel for the markets by looking at the order book, because then you see the big traders, all of a sudden everything's 5s and 10s and 20s and 30s, and all of a sudden you see 200 or 500 show up. And a lot of things that you see, and it was the same way in the trading pit, by the way, is you get these flash offers or bid. You get some guy, hey, 200 at so-and-so, and he's not at the market. He's just yelling and making noise. And he's out there, and you think, is this guy serious, or is he just doing a flash order of some sort? And you see that same thing. And then once in a while, you see these orders are real. And and sometimes you see them. You can join into the book if you're day trading, and try to play into the order book a little bit. But that's a technique. That's like the old tape readers. So I always tell everybody, if I was in Vegas, I'd probably be banned. I would be a card counter. I'm a bar counter. I look at the order book on intraday, and I can usually figure out what's going on pretty good. I can tell you in the last, I don't know, year, I don't even know how to qualify this, but there's major air pockets that occur where there's literally vapor locks, where it goes 600-800 points on the S&P just in seconds, and there's nothing. If you get caught in one of those, you've got some issues there. So let's talk about this price discovery and what drives prices. Most people think it's volume. It's not volume. Volume doesn't drive the price. Volume's a component of the price, but it's not what drives it. So, example, this is so there's a million to buy at a price. Let's say, we'll make it easy, half bid at 5/8. Both sides, million to sell, million to buy, and so I'm showing my order size, and the guy at half bid for $1 million, guy's 5/8 at a million, 5/8, and finally nothing happens. Somebody's got to compromise. The seller's got to go down to the bid. Okay, I'll take your million. They trade a million shares, and the price changed 1/8. Okay, so, but here's a different scenario, and this is what really makes. There's a couple of concepts I'm going to talk to you about, and you can see this if you have level 2 order book happen. There's a couple of things that happen. It's not the volume counts, but it's the aggressiveness of the volume. So all of a sudden, if I'm a million bid at a half, and there's a guy 300 bid at 5/8, I'll just go 5/8. Take your 5/8, 300. I'm bid at 5/8 for 700. Somebody goes 3/4. I go, take your 3/4 bid. I just changed the price by a quarter in 2 trades because I'm aggressive. I'm willing to take the offer and raise it to the bid. And you see this happen in the order book all the time. And so now I've only traded 500,000 shares, and I still got 500 to sell. And somebody goes at the buck. I'm like, take your buck bid. Somebody's at a quarter. I just start, and then if I get my friends to come in, that's why you see these runs on these runs, and it'll just go up, and then it hits the air pocket, drops back down, the bids are gone, and then it settles back in, usually a little higher. But the aggressiveness of either side of the market, the same scenario if it was a seller, it's the ability and this was something that used to happen in the old trading pits. It still happens in the order book, where you'll see the offers will just come down, and then there's size on the offer. They hit the bid, and then it's offered at that bid. And they just scale it. You'll see the book scale down or scale up. And it happens very quickly in a digital world, but it's the exact same as it did in a trading pit. And sometimes in trading pits, it would do the same thing. So the other thing I learned is recognizing acceleration triggers, I call them. It's just what I'm talking about. When everybody starts to come in and you see these lots of volume comes in behind, but they're all same type of characteristic. They're very aggressive volume where they're just taking out the offers, they're bidding the market, and it's just a run on the market. And that's when you'll see like the we'll just use S&P because I'm so familiar with that, where you get an S&P run where all of a sudden it just rolls them right up, and then they got a solid bid underneath. And every time they drop 2 or 3 ticks, there's a buyer there again. Then all those folks are just sitting there, and then there'll be another acceleration run. And so that's all going to happen within the context of the patterns that are out there and things that we're going to look at here in a little bit. I think what we'll do is take maybe the last day or so, 5-minute E-mini trade, and I'm going to set up all the indicators. When we get at the end, I'm going to show you how all these indicators happen. So we'll be able to watch a little bit of what happened and what kind of things are coming out of all of the indicators and what they're doing. So that is understanding what makes market. And there should have been one more thing on here, which was tick volume, meaning transactions. So next time you're watching the market, watch when the frequency of trades start to happen faster. So you'll see markets where they're tit-tat, and all of a sudden it'll start trading back and forth, very erratic, like this. And then all of a sudden you'll see the market move in a direction. But you get this very erratic movement. And unfortunately, I can't simulate. TradingView does not have a level 2 on their platform, but running TradeStation or something on E-minis, you can see this, but you'll see this on the ticks on the bar that you have. And I'm as you'll see, I'm big on just old-fashioned bar charts. I don't really like candlesticks. I'm more interested in price range per period than I am about candlesticks and engulfing patterns and all that stuff. That's just me. That part of who you are and what you understand, and that's just fine. I'm not criticizing it, not saying it's not valuable. I don't do it. All I'm interested is in price ranges, and that's why the market grid and all those things are important. All I want to see is how we're trading within the grid, formations, momentum behind it, looking at the PPMs, what kind of, is there an underlying trend? I'm just looking at all of those items, and it's all getting reconciled very quickly in my mind. So a lot of techniques that I do talk about a digital floor trader. There's a lot of things that I'm playing into the order book. I'm hardly even looking at the chart sometimes. I'm just playing the order book. I'm glancing. I know where the chart context is, but the order book is driving the type of intuition that you get from trading, and that's where the floor trader is. It's just understanding those acceleration triggers and things that happen, and when you start to see, you'll see a very quiet market. All of a sudden, you start to get erratic activity. There's an abrupt move about to happen, up or down, and hopefully the tools, whether PPMs or price projection tools, things of that sort, are going to tell you where they're going to go. And we're going to do, probably by the time we get done here today, we're hour 15 in, just getting through secret 3. So what we're going to do once we get to the indicators, we'll start talking about some techniques. Listen, I could probably do this for 10 hours and we still wouldn't be there. So I'm just going to get through these ideas. These are concepts I think if you understand, that you're going to be able to have a better shot at putting your context and how you're trading together. Like I said, in the future, there'll be another webinar like this or seminar that I'm going to do, which will start talking about portfolio construction and activity within portfolios, and that's a whole different concept than this stuff. Trading, looking at price movement is one thing. Portfolio management, dynamics of portfolios, allocation, dynamic allocations, all that stuff is a whole nother ballgame. That's a 3-day course to understand in itself. The nice thing is I've built software that does all that, so you don't even have to know the techniques. Maybe you need to understand them, just so you can build a good enough belief system that you'll follow them. So let's just kind of summarize this real quick, and then what I'll just say, kind of wrap it all up here, and I'm gonna go back. I want to go back to this slide here with. I want to go back to this slide for a second here. So basically, secret number 1, right, is overcoming emotions, journaling, all of those things. I'm telling you, folks, if you do this, you will so improve. You have no idea. Anybody that's done any, it goes back to my woulda, coulda, shoulda book. Anybody that's done any type of self-improvement, this is a very psychological game that you're doing here. So this is important. And the whole goal here of all of these steps, secret 1 is journaling, and especially day trading, learning how to fade yourself, how to recognize those negative emotions that are really positives. Usually most of the stuff you feel in the market is the opposite. When it starts going up, I saw a meme that was really funny on Twitter earlier this morning. Had some guy watching the market just screaming up, and he bought right at the high. That's what I'm talking about. When you want to buy at that high, you sell. You fade that. You fade that idea. And it's a hard concept to grasp, but once you do, you'll find it incredibly. So number 2 is a trading plan. Not only developing a trading plan, but validating, trying to implement it, using the whole technique of using the SIMs to try to authenticate this before you put the live money in there. And the live money is going to be the next level, because then you have to kind of go through the same process again. You start to see where the emotions, and this is a loop right here of doing the plan. These 3 secrets are a loop, and becoming that high percentage trader. That's what it's really about. And the psychological parts of this are really, really big. So I just want you to keep in mind that this all 3 of these secrets all work together, especially secrets 1 and 2, through the validation process, all of that you're going to have some perspective on, or you're going to make some really bad decisions, and they're going to be very emotionally charged, and they're not most likely going to work. If you figure out how to counteract your own emotions and trade against them, it's brilliant. I'm sure if we were doing a one-on-one training session that I could spend some time with each one of you, that what would happen is we start to identify some of these things, start to tell some of this story of, oh yeah, I got in this trade the other day, and the second I got out, went up, or whatever happened. That's why you journal. That's the voice. That's taking the voice in your head and making it conscious in front of your eyes, so that you'll do those. You'll start to develop better habits, better decision making, all that stuff. Without it, you don't have a chance. I'm just telling you. This is what everybody has to go through. And then, of course, so we go back to secret 3 is understanding price discovery, market activity, those type of things. But that's all on your chart. This is really what the main thing I learned from being around trading pits, dealing in order books, digital order books, They're very dynamic. They're very fun. It's a video game kind of mentality in there, and it's not any different than your favorite video game when you come down to it, especially day trading, and especially when you can react to the spikes. Those who've been in a room, when I see these big spikes up or down, I'm a buyer or seller. I load the scalp off those spikes. Sometimes the spikes go further than you think. We did live the other day. We did the 3-day trade. We're not going to do that today, but we also see those kind of spikes where we get the news came out when Powell first started, when the Fed's news came out, we get the big spike up. You fade it 2 minutes later or less, you take them back in. There's a scalp there. I saw people that were on the live stream I did. Usually we do those things in the live room. We did that technique. I told everybody about it, and a bunch of folks said they caught it. It was very cool. And you have to be very aggressive, and you're in. As soon as you're in, sometimes you can grab 400, 500, 700 points, maybe more. They can be really big trades if you get a big reversal off of that. So anyway. Okay, so I'm going to ask you folks a question here, and if you're new around here, we got about 350 folks watching right now. Are you ready to actually do this stuff? Are you ready to go to the next level? So just go ahead. The link's here on this page. Sign up if you haven't signed up for these things. And I put a lot of effort into this community. This is me giving back to all the knowledge that I've chosen. Do I have all the answers? No. I've got a few techniques that make money if you do them. That's what it's all about. And if you can take some of those things and learn some new tricks on your own, which you will, then that's it. So you definitely want to do that. One of my favorite tools that I'm going to show you here in a few minutes is the Wavetech webs, and I'll try to put everything together on a chart. I don't know how effective we're going to be, because I think all the time we spent here, now I'm on hour 20, still finishing this first section. I believe we're going to, we could spend at least that long on any one of the 3 techniques that I want to show you, like the day trading. We could spend hours on each one of these. So I'm going to do more of a brief overview today. Maybe what I'll do is do another one of these, and we'll just do a day trading approach. And like I said, really the goal is to get a real master class together where you really can dig into this stuff and see it work. And that's the nice thing also about getting indicators, getting into the live room, doing that stuff, is you're going to see techniques being executed in real-time mode. So that's really good here. Chi-Town, Tony, we're going to do the web. So I've got everybody here on there's not a lot of folks on Twitter right now. Let me see what we got. Yeah, there's not very many. So in this next section, if you do have questions, that's going to be, I can go off the text, that's fine. But sometimes if you want to have a more detailed discussion, we can do that. Yeah, so let's go, and I think maybe what we'll do here is do a 5-minute break. Well, let's do this. Let's take a break just for a few minutes, and we'll come back, and then we'll go through the indicators, and I'll get through everything we can. We're hour 23 in, so we'll see how we can do. I think there's probably necessary. Everything I'm going to go through today, the indicators I'll show, I'm going to have to pick a couple elements that I think will be useful to get through this today. I joke that we could probably go 5 hours. That's probably a little, a little deep. Yeah, I'm not going to do any market stuff today. Sorry, Diane. But I will be doing that on Tuesday night. There will be a video, or Monday night ahead of Tuesday. So we'll have that. Yeah. So, yeah, I bet, David. What is it? It's 4:30 in the morning now, right? So thanks for coming. That's awesome. So we'll go ahead and just take a few minute break, and then we'll come back in. What time is it? 6 minutes from now, we'll restart. Okay. All right. Let's do that. Okay, folks, we'll get started here in just a minute. Yeah, by the way, an engulfing pattern is just an outside bar, right? Okay, folks. I went outside. It was pretty windy out there. Went for a little walk. It was nice to move the legs. So I'm going to start off, just review all of the indicators for a moment, and we're going to go through these pretty quick. We're going to start with the Wavetech Pattern Finder. We're going to go through all the PPMs, the webs, all this stuff. So I'm just guessing that this will be well under an hour to get through here. And it's going to leave us, I don't know how much time to get this through. I guess I could go about another hour and a half and we would start to finally get to the point where we're probably got enough on this section. I'm probably going to just talk a little bit about day trading. We'll touch on that. We probably won't focus on that. That's a whole deal. I would say one of the things you can do that, if you get the indicators, you'll be able to come into the live trading room. You'll learn everything there. Yeah, so we'll start with the pattern finder. Just give me a second on the other screen to set up one thing. Thought I had everything set. It looks like I do not, but that should only take a minute. Oh, there we go. So I've got our day trade set up. So this is my plan to do is we're just going to go to Trading View from scratch, and I'm going to set up just one-on-one with each one of these. I'm going to go to the charts and just bring these up, and we'll set them completely from scratch. So I'm just going to go on each one and go through it. And let me just, I'm grabbing a tab over here on something here, just so I'll have some context. So we're just about ready to go. Yeah, I was hoping you guys were discussing the content I just went through. I could follow up on that. You guys are pretty into candlesticks, so that's cool. All right, so like I said, I'm just going to come over here for a second. I just want to set up something real quick. And so when we start talking about the pattern finder, a couple of things that I want to bring up here. And let me set up a brand new chart. So we're just going with a new layout, and we're going to start from scratch, and we'll put SPX up here just to start with. Let me get this down to daily, and we'll go through a spectrum of charts, and I'll talk a little bit about what each one is. And when you get the indicators, folks, you should have them in the invite only scripts. They should show up here. And what the reason why I'm starting with the pattern finder is this. There are three indicators that you're going to have. It's going to be the pattern finder, the fib projection tool, and then you're also going to have the pattern finder. It is the logic behind the fib projection tool and also on the cycle finder. So all of these have to do with a concept. So I'm going to cover this concept. So this will make it easy. I'll put probably all three of these on one page just to get you up to speed. So I want to get through the concepts here, what they are, and this was originally developed in 1992. I think this was one of the 92 indicators. But let's go ahead and put up the pattern finder here, and it's pretty good at locating all of the swing highs and lows. This is what we're trying to figure out, is basically maybe some Elliott wave patterns there. We just wanted to see where the high lows were, and then this tool was really just made so we could do the other two things. So we could do the cycle finder and we could do the price projection tool. And this, when I get a little bit down the road here, let me get this full screen. When we get this a little bit more down the road, I'll show you some techniques and how to find a trade setup that I talk a lot about. And there's actually some scary setups when we look at the S&P. So maybe I'll be able to show you and tie in a little analysis thoughts as well. But these patterns are marking. This is what the basis we need is to know where all the high lows are. That's all this tool is for. I'm going to show you a couple settings when we go to the settings so you know how to use these things. Right now the strength is on 2, and I can change the pattern that it's recognizing. So I can make it about 6 is as far as you want to go. So now it's recognizing the big swings on the chart. So you can just see big swings. And the way that this works is you have to get 6 bars. Once this low mark here, let me show you one more thing. Sorry. This is the other thing that's really good, is show pivots. And these pivots are these arrows at the top here. Let me, I never can remember how to make these arrows bigger, but you can see that the down arrows and all the marks on the patterns that are out there. And so what this does is give us exactly what the swing lows are. There's a trade right here is the perfect trade, and I'll show you. So this tool here, the pattern finder, is just to find highs and lows based on a strength. So the things that you can do here on the settings under style, you can change some of these values here. You can put the labels over on the screen if you want. You can do all that, but the main inputs is what you want to play with. This is set on 6. Typically it's on 2, and you'll see it finds pretty much all the zigzags on the pattern. 4 is a pretty common setting. This is going to also set you with some of the larger swings in the pattern. And once we get to the next level, I'll show you where some of these done. And yeah, that's always the question. The red is down. The blues. I meant to get a hold of Sam before I did this because I knew that question was going to come up. I think they're just colored. I'm not sure they mean anything. The pivots are what's most important. The greens are low pivots. The reds are upper pivots. And you can change all these these colors if you want. There's full, and the styles here, you can change everything that's out there. And I think visibility, they're available on any chart. So yeah, so but what this is going to give us is the high-low points based on a strength. So I'm actually just going to leave this on, and we're going to go through the next pattern is going to be I've got market grid here. And I want the fib projection is going to be our next one. So we're going to put that on the chart next. So let's go ahead and go to the indicators. We're just going to do all three because they're related. On here is so we're at invite only, and we're going to go to fib projection. Now this tool is magical in my opinion. So the dots that you're seeing is where the projections are coming up, and they're being done. And I'm going to draw in some things here just so you can get a little bit of context here from the standpoint of what's being drawn in. And these are going to give you a little bit of a window of expectation. And those of you been in, when I get through this section and go through the PPMs and all that, I'm going to come back and I'm going to add all these things in as tools which to identify the trends and the trigger points and all that stuff. So I'm going to go into a fair amount of detail here. Okay. So these dots are doing a couple things, and I'm going to show you the techniques here, and I'm going to draw in something here from this pattern just so you can see it when we. So when we get a pattern, you should be able to see this green line. This is what I talk about, 1 and then 1 and 3. So there's this pattern here is the initial move. This is the retracement move, and then you get the projection to the upside. And the yellow, you can see where my arrow's putting right here, was where this bar, this length here was equal, that this bar was equal right at this point to that length of 1. So the theory is 1 and 3 will be equal. There'll be 1.382 times the ratio, or there'll be 1.618. So you'll see the red line here was exactly where we ended up going. I'm going to take off some of these arrows here just so you can see what's going on here. But and it's somewhat interesting, even though there's some overlapping patterns here. I've got this set on, the pattern finder is on 4, and the fib ratio tool is on 4. Let me show you the settings real quick. Wait, I've got this drawn. So this length of this move here ended up to be almost exactly 1.68 times this length over here. So 1 and 3 are equal. I'm really anxious. I've got a new tool that will be here with my new computer next week. So I'm hoping to have that in where I can actually draw in some of these patterns much more accurately. So let's just go here. Let's see what the fib ratio here was for a move up here to 46.46. The high, let's see if I can get the right number here. That move was 46.40 was that target move, and we printed up at 46.37.30. The first calculation came out at this low right here. That's when you got the fib calculation. And later, when I bring in the PPMs, I bring in the entire suite, you're going to see the confirmations of the move and how this all sets up. And what we'll do is, once we get everything on there, I'll actually go back and do a replay, and we'll let the bars come up every 20, 30 seconds at a time, and we'll be able to go through this whole scenario. So this fib tool is pretty good. Now, this will work on any increment of time. So this is S&P right now. I'm going to take it down to a 5-minute chart just for a second, and let me reset this. So you can run these same patterns. It's going to generate stuff in real-time mode, and this is a very useful targeting tool for when you're trading intraday as well. So I'll go through that when we touch on the day trading. But any increment of chart, even a 1 minute, you're going to get the patterns, you're going to get price projections, you're going to get everything here that's set up. Like here was a Fib 2 target hit almost exactly right here, and then a rejection from that level. There's some other things that we'll talk about here in a minute. Let me go back to daily and see if I see any. Yeah, okay, here I'm going to zero in on something right here in the middle of the chart. There are times when one of the fib targets will continue to stay live when the others cancel, and those are called, it is identifying a pivot number. Here's one up here that was happening. I'm gonna have to draw these in and make sure you folks are seeing exactly where I'm talking. So right here, there is, I'm just going to draw it right here. There's a line that comes across, and that's the pivot. So when we trade it over the pivot, when you have the PPMs, I'll show you something on this, because this is a daily S&P chart. We'll go back to that. But you can see where different levels, there was a big pivot that went across this level here. That was basically a major support pivot, and need the PPMs to draw this in. But all of these target zones are set up, and as the market unfolds, and this is set right now. I've zoomed in this area. So if you kind of go to a current level, you could see, and this was on the nightly video that I talked about, is that we went down to this fib. I'm surprised we get down here, but the level was down to 37.26 was the, let me get the number. Yeah, 37.23 was the fib target 3. So we actually went down to 36.39. So we went through that fib target, but that was just a steep drop. We've got, 2 gaps in the S&P above the markets here. So you got a breakaway, a runaway, probably one more gap. And these targets down below here are actually, even though they're not calculating more, they are identifying a bigger pattern. And I'm going to draw that in. And it takes some, when you're seeing this, when you're seeing this type of pattern, oftentimes they stop calculating, but that does not mean they're invalidated. So these targets down here are coming off a larger pattern from here to here, and then projecting down these 3 levels. So this is a bigger pattern. So the way we would find this, we could just change the strength on the pattern very easily. Okay, so this is going to give us the next level. Let me take this off. And so we can come up here to the fib ratio tool, go to the settings, and we can start to play with this. And we can go strength high. We'll go to 6 on both of these. And let's see if there's, so there's no downward targets right now, but you can see that the 6 does a bit better job at targeting the highs and lows of the pattern. So you want to play with this to get it to tune into the length of chart, because I could go over here and go to weekly. Let me reset this. So I could go to weekly. You can see way back in November of 20, we had a target of 46.12. We obviously went just above that. We had another fib target set up. We basically got rejected from this area around 46.43. That high was 46.37. And then we're getting these targets now. This is the weekly. So we've hit fib target 2 on the markets right now. We're looking at fib target 2, 36.64. So we went through that by a little bit. The lower target's 34.98. And it's very possible we'll see that next week with this weakness that we have. Friday's rally was nothing of any interest, I think. So let's continue it. So this is the pattern finder on there. This is the fib tool. And I'll probably take off. I'm going to put up here next, because all of these are related. I'm going to put in there this cycle finder. And then you'll see some dots coming in here. These dots are where cycles were hitting. There was basically a cycle high came in here, and then we get the rejection. And I don't have my classic 4 moving averages on here. I'll save that when we get to the full setup. And that'll go along with the PPMs. I'm going to bring that up when we go through the PPMs. So you see we're rejecting. This is a weekly chart. So we've got different cycles come in. There was a low cycle right at the low bar came in. And what I'm going to tell you with these cycles, what I do with the cycles is it isn't a time where I want to focus on that activity in the market. So I've got a cycle coming in. I'm looking for, is there a reversal bar? If you're a candlestick person, you might look for, engulfing pattern, a doji or something that you identify as a top or a low or whatever the cycle is coming in, giving you that extra signal. And one of the things the reason why I have all of this whole suite, and I talk about this on my channel all the time, is you want to have clustered events happening at similar points. And when I see price targets, cycles coming in, everything starting to come in at the same time, that doesn't necessarily mean it's going to be a bottom or a top, but that tells me I should focus on this activity very closely to look for that bottom or top. And when it comes to cycles, I believe there's 3 different kinds of cycles. I think there's the one that you already know, a low cycle, a high cycle. I think there's something else, and I've talked about this for probably 30 years, is there's a continuation cycle. And this cycle over here was a low and in the middle of a trend, was a continuation of a trend. So right now, all we have is everything that the pattern finder does. So that's why I tied all 3 of these together. Everything the pattern finder does interacts. It's the logic, the basic logic that is driving the location of highs and lows on the pattern that the cycles are being projected from, and also the price projection. So let's just review all of these. So price projection is looking at the 1 and 3 pattern that I talk about all the time, and that's telling us. And let me draw this in just real quick so you have a handle on this. So the 1 and 3 pattern is this. This is 1 right here, and this is the 3. And this is elongated, but if you look at the pattern, we basically went to the equal mode here. We didn't get up to these upper levels. There was another pattern that was recognized in here, and this is what is being projected on this level. They were what I call island, basically. Just the fact that it gets hit up there doesn't mean it's going there. And this, of course, we're looking at right now a weekly chart, so we're looking at the top of this top of the market and entry into the bear market. And so what's happening right now is we're getting these. We got the cycle high that comes in. Now we also have a pivot right here. This tool freezes the screen, so once I get off that, I'll do that. So this is a big trend point. So I'm going to tell you that we probably have the potential for yet another pattern to come down. And, this market gets pretty ugly pretty quick. Wave 4 of this is around 3,200 could be a target. Just looking at everything that's set up here, this is likely to get way, way worse before it gets any better. And full evidence of that is Joe Biden riding a bicycle this morning, right? Falling off his bicycle. So no knee pads, and he took it on the knee. It looked pretty ugly. But anyway, this is just the basic setup patterns. We got cycles, we got the pattern projection, and the tool that's marking it is just, to identify those patterns. If you want to see those patterns, you can get it. So one of the things you can start to do, you can go up here to the pattern finder, hit the eyeball, take that off. But what I still want to see those pivots, right? So we go to settings, we can go into here and show pivots. So we can see those pivots still on the screen. So you can see here when I did get the pivots larger on the, this is off the fib tool. Same pivots that we were seeing off the pattern tool. If you don't want the lines on the page, you don't have to have it. We just put that out there to show you the logic and how it was finding these highs. It's way better than like the zigzag tool and stuff like that. The logic is reasonably sophisticated to target these exact patterns. So it does a good job. And then once we have that information, I'll tell you just a bit more about the cycle tool. The cycles are being projected, and I'll do my best to draw this in. And this will be kind of the final mode on this. So it's not just one cycle that's hitting, but there's multiple cycles hitting from the same level. So I'm just going to spin back a ways here. There's got to be 3 or more cycles that are hitting at the same point in time. So this is what's going on. So this is kind of the boring stuff, but I want you to understand what they're doing. So this is what's happening with these cycles, and I'm just going to draw up. It's doing 3, 5, 8, 13, 21, 34, 55 Fibonacci sequences all the way to 144, whatever those bars are. That's probably not 144. I just want you to understand. So it's taking every one of the highs in every bar in here, and it's projecting these numbers, and it's looking where there's 3 or more that hit on the same day. So it's a Fibonacci cluster cycle that we're looking at here. So that is pretty much as in depth as you want to go in as far as these indicators go. Really what brings everything together, I believe we're going to do PPMs next. So, we'll do those next. There's a fair amount to go through there. I mean, we're 2 hours in, so I warned everybody it was going to be 2 hours plus. We're just getting into understanding. So I'm going. You'll probably have to come back and watch. I realize people probably, it's already getting late on the East Coast, so it's getting into dinner time. So it just takes what it takes, folks. So I'm going through a lot of detail. So this is kind of a mini master class on this stuff. So let's keep rolling here. And yeah, so So next is going to be the webs. We're going to do the webs, then we're going to do PPMs, and then market. We're going to do webs. This is right now the picture. We'll do webs and grid together. So we'll do those two together, do PPMs, and then we'll go into probably just using PPMs as a trade setup. We're not going to probably get into day trading today. I don't see that happening. Okay, so let's clean all this stuff up here. For right now, we'll get rid of everything. And we're going to do the webs. And listen, I tell you, this is not anything necessarily proprietary from that standpoint. These, I'll tell you what they are. These are linear regressions. There's 20 of them. Now, 2 through 21, and they're just overlapped. So I made an indicator so you didn't have to sit there, and if I told you about this technique, and you were going to have to sit there and put on these indicators, 20 of them. So you just one indicator, especially if you're on a lower level, you're going to need, from the standpoint of on TradingView, to do everything I'm going to show you today. I think you need at least a premium, possibly a pro version, to put on 9 indicators. If you do everything, you'll have to have a higher level. So let me do a couple things here. I do have something, a template here. I'm going to make this black background. It's a little easier to see. And yeah, so I do have the thin bars on now. Okay, so that's good. So now we can see just the grid itself, and or the not the grid, but the webs. And I will tell you folks, this is, in my opinion, this is the best pattern recognition tool. I've got this on a daily chart right now. I'm going to flop it over to a 5-minute, and let me reset this chart here. But this, for intraday trading, is one of the best tools ever, and it's going to help you set up an awful lot of trades. Like I said, I know some of you on here been in live trading room, and you already see a whole bunch of patterns I talk about all the time. And I was talking to somebody the other day. I've recognized a new pattern if I see it. This is basically what I call the horse head. This is the vomiting horse head, and I found out the horses don't vomit. It's too bad, because it would fix a lot of their stomach issues when they. But the bottom line is that it forms this little formation. So I got a whole bunch of weird names that I talk about: diamond tops, diamond bottoms, basically rounded, what I call whale belly, look like the ribs on the bottom of a whale. We'll see what we find here just off of this. But these patterns are really good at telling you when this is what the concepts behind this. And the concept behind the webs and these linear regressions is these linear regressions start to cross over and start to indicate trend changes and resistance points. And they're really good at them. And I've got them color coded a little bit. There's a couple primaries, the purple and red that's in here. Probably should make them a little fatter. And you can go in, that's one of the things you can do. You can go into the settings here, and you can make any, here's a red one. So I could go here and make that next level fat. There we go. And the purple, I think, is the other one. And make that. We'll make that a little fatter. Let's see what happens. Yeah, sort of, that could be a better color. But the purple and reds are pretty kind of crossover points, but you can see that there's some very distinct patterns. There's things that happen when the market starts to stall. And I talk about the crossing of the webs and all that. I think what I'm realizing, this will be covered when I do the day trading, let me just get full screen so you can see these a bit better. When I go through a full day trading, I think I've already decided I'm just going to have to do a day trading session, and we'll just have to do that. And when we're going to have to do that is when the markets are live. But I'll show you, I'm going to show you something here on this as well so you can see how these things start to form. So I'm going to go back a little ways and let this run. I'm going to go to the replay, and we're just going to run it from about here. And we'll just kind of, and I'll talk about these things as they're forming. So you're going to see this is, if this is a 5-minute graph, if it's real time, what we look for is a couple formations here. I'm going to pause this for a second. So we get a couple types of formations, folks. When we get the linear regressions sloping down, this is what I call a rope, and this, you can see the flow of the trend through all these linear regressions. You get a little up spike, but you never get crossover where you get a complete cross. We did get a cross here and then a final low, but when you start to see this where the webs cross over, it starts to tell you there's a potential. We're probably close to a low. This case, we have one more low, and now we've got a diamond, a move up into basically a diamond formation. So we get all these crosses. So they're telling us the market's stalling. Of course, then if we add PPMs on this, it gives us some insight into what's likely to happen. We could also put some moving averages on top of there and go into more. And like I said, I'll show you a little bit on some setups here. Matter of fact, I'm just going to do it right now. So let's go to indicators. I actually did a script. It usually gets passed around in our live room so you can do it. But I have 4 moving averages. We'll start to introduce that right now. Is that I've got the 10, 21, 40 simple, and this is a 200. So this is on a 5-minute chart. So let's let this run just a little bit more, and let's see what happens with the bars. So we get a little diamond bottom here, starting to get a surge up. We're getting some crosses. In fact, I want to slow this down just a little bit, just so we can see this. So you get the crosses. We went right back down into the pattern. But you start to see what we look for here, and this is on a 5-minute basis. We use a 5 and a 1 on the markets from that standpoint to trade with. We try to take the 5-minute bar and break it in 5 parts. We'll do that in a day trading. But you'll see that these patterns, now we're getting the flow of the regressions that come up. We got moving averages here. We could add in the PPMs and really bring in some more perspective of like what's likely to happen here. So I just let this run for a few minutes, but I want you to see how these formations set up, and you can see where the key turning points are. And we could add, in fact, let's just go ahead. I'm just going to do this at this level right now. So I'm going to pause this. We go to indicators. Let's put the let's do something else here. Let's just do this all at once. So what I'm going to do here is I'm going to go to my invite only scripts, and I'm going to put in fib projection, and I'm going to put on that's fine, and I'm going to add onto the fib ratio. I'm going to add on show pivots. It's on a 4 setting, and so we're going to run this. We'll run this real time. We'll re-simulate this series of events. You can see the fib projections came right in here where the pivots are coming as well. So you're seeing these turning points. These webs are absolutely amazing. Embedded in here, I've got 10, 21, 40 moving averages. Here's a new downward projection happening if we were running real time, this would be real time. We just hit Fib 1. We bounce off of there. You got a 21 period moving average in there. So I'm just gonna add this in right now. Hang on. I just want you to see this. So we're going back to indicators, and we're going to add ppm 1, 2, and 3. And so now we've got basically a lot of the suite running. So let's just keep this. Let's keep. We can resize these things so they're maybe a little. I want the bar chart to be just a bit bigger. Let's change the scale a little bit. Okay, let's let this run. So now what you'll see, we've got these upward projections right now. So we'd be looking for confirmation from the PPMs, and PPM 1 is sort of trying to turn positive, but it's negative. We just got downward projections. And looking like, okay, we just went through projection 3, but I'm trying to get these webs just so they're easier to see on scaling. There we go. So this is what we're watching for. This is what I call a very noisy period. So to go full Monte on this, right? We pause this, and what we would do is go to, I think I might have messed that up. Let's see. So we throw the market grid on there as well. So now we've got the full perspective. This is what we end up looking like when we start adding in more of the tools. And I'm going to go through a presentation here as far as the PPMs go. There's some things I need to tell you to understand those. So, yeah, so the pivots that you're seeing there are 4 bars. That pivot didn't show up till 4 bars. So I'm going to show you. I'm not sure I'm going to have enough time here today to do this. I'm going to try to get done around a little bit over 3 hours here. But let's start this pattern again. You know what I did? I'm going to have to set the replay again. Apologize. We won't go back as far. We'll come over to here. And we'll set the replay. So we'll start to see all of the market grid. You'll get STX buy signals. You'll get all the stuff that I talk about all the time. And I'm going to go through market grid itself. But I just want you to see how the suite starts to work together. And we're looking for confirmations of values here. And look, here we go, right to Fibonacci 3 target. We went, so we're getting expansion here, and it's starting to cross over. Look at that, just above that Fibonacci target. All of a sudden, we start to get the crosses, all the webbing at the top. That was where the top was just set. So you literally are selling in there. You can reverse, get short. PPMs were turning down. There's a whole lot of stuff going on here. So I guess what we could do, we could actually put maybe Bitcoin up here real time and just see what's going on there. But we'll run the sim. Now, we got some upward objective coming in here, 95, 37.20, and 37.32. PPMs are kind of faltering here. We got another resistance point. See if we set up a right shoulder or anything. But these, like I said, I'm not going to be able to do, I just want you to see all of this stuff working together. Yeah, Lance, I hear you. Just whether the old man can keep going. Yeah, there's a dragon head. So this upward projection, we've gotten, it will recalculate as the patterns are emerging. So just real quick, let me come back up here for a second. Yeah, so all of this stuff, as you start to see this stuff work together, when I go through and get a little more context, I don't want to do a lot of this, that we'll do a full day trading environment. I'd like to do it real. I don't like to go back and do a replay. I don't like cheating. I could cheat and find the best area of the chart and say, okay, let's replay this. And I know everything's going to happen before it happens. Way better real time, so you can read it and make decisions, and you can see how that goes. But that's easy. You get the indicators, you sign up, you come into a live room. That's what we do. So usually what I do is I do combine for actual trading. I'll bring in the level 2 view from TradeStation, so we have that order book that I was talking about earlier. But let's just run a few more seconds of this thing. So we got right up to the 200, almost got to Fib 1, just got a pivot here, got a marked high, we got downward projections, and you know it's really interesting to watch this and interpret it as it's happening in real time. And you really start to get a feel for how all these patterns work. We just got some upward projections up here. Right now we're looking at 37.14 and up. We're really don't have positive PPMs. Nothing's telling us. Here we're trying to turn the PPM 1 up here. Maybe we'll get a flip, get a run up there. But anyway, you get the point. That when you start to bring the suite together, now you got market grid. You can see sometimes we're looking at, we print, S1, S2, maybe an STX. You see all these patterns and you see them in real time. Of course, this is a 5-minute chart that's updating every 20 seconds or so. But the point is that you have more time to think about it. So that's the end of the chart there. But that's a pretty good setup. So here's what I think we're going to be able to do today. Okay. Man, I hate this bot that shows up. Let me get rid of the nasty. All right, they should have disappeared. Just real quick comment. I'm just looking at the timeline here. Final, if you go to settings on any of these, you go to settings and go to style. Down at the bottom, there's 2 things you have to click. Labels on the price scale and values in the status line. So you can do both of those, and that will give you those values over here on the right hand side. You can actually put some of the values in here as well. On market grid is got a lot of values there. So there's, when we go through I'm going to take out the time, and we hopefully can go through a brief review of the indicators that we're going to use, and then we can do a day trade session. Maybe I can do it on a Saturday. That works out pretty good for me. Life is going to get hectic from my viewpoint over here in weeks to come. I've got potentially a big trip coming up and some other things that are going to happen. So we'll just keep doing these things the best we can and get everybody set up. So let's get rid of all of this stuff. Let's clean up this chart. Actually, I'll leave the PPMs up. I should have left I'm going to leave the 4 moving averages. So what we're going to do next here is I want to go through the Wavetech, the PPMs 1, 2, and 3, and WT 200. That's typically counted as a separate indicator. They're really all PPMs. They're just targeted on different moving averages. So all of the moving averages that I am using, I always state, are 10, 21, 40. I've added the 200 a couple years ago. I found it actually pretty useful, and it's interesting how it does come into play. I hate the 50 and 100 that people just do 50, 100, 200. The reason why I chose 21, the 10, 21, 40 is we did this based on Wavetech, and this was going back to research in 1984. Just to give you some background here, research in 1984 that was really trying to come up with a technique to do wave counts, and that's probably a whole nother thing where we actually do the Wavetech and do some Elliott wave stuff. So I could literally do this stuff for weeks on end. Every day I could do 3-5 hour class and still never get through it. I do have some of this stuff. I have about 38,000 words in toward a book that I started. It seems to be stuck, like all people that try to write books. They're pretty big undertaking. And so this is pretty big stuff. So what I'm hoping for eventually, and this is one of the reasons to do these videos, is that we can take these videos and turn them into a book that then we can add to and subtract and do some things, turn these into script. There's all kinds of people out there in the world and techniques and software that will take this and turn into text. So anyway, that's for another time. But the PPMs, these are really important. So I use 10, 21, 40, and 200 moving average. For the most part, 200's out of play with the day-to-day patterns, weekly or monthly patterns. But I'm going to show you, the next chart I'm going to show you here is actually the probability map to what the PPMs are telling you. And Dr. Prater and I did this work back in 1984. Bill and I were trying to come up with a couple solutions, and primary one was, when was a moving average going to hold? When was it a valid trend line? And when was it likely to break down? Everybody uses moving averages. I say everybody. Most people use moving averages in some form or another, crossovers as trend lines, whatever. I do too, and I have forever. I find them incredibly useful. But what we figured out with the PPMs is when the probabilities were changing, when they were going to hold. So you see a market come down, hits a moving average and bounces. Or inverse, if it's a downtrend, it comes up to that moving average, like 42.07, like we had a couple weeks ago, right before it goes to that 36 handle. Once we get to that level, and depending on the angle of attack, which is the theory I'm going to go through here in a minute, that tells you what the probabilities are that rejection or that support bounce is going to happen at a value. Okay, so we thought in 1984 there was a piece of software out there called CompuTrack, and we used CompuTrack, and we could build our own indicators there. It was very cool, very much ahead of its time. I've talked to Tim Slater a couple of times. I used to be in the Tag Series seminars back in the 80s, and those were fun to do, and hung out with the likes of Larry Williams and Bernstein and Chake and all those guys. I was kind of the young lad in the room. We were all younger then, but I was really young at the time. I was probably 30, 31. So I was definitely one of the youngest guys in the room. But all of these techniques and understanding this probability, when Bill and I were trying to solve this issue, was like, okay, there's a couple of things, and you hear me say these things on the channel all the time. One of them is, this is the primary demand line. So we started to figure out where was demand. If it was an uptrend, where was there going to be buyers showing up? What value? Why would they show up? And could we determine that through the moving averages? And rather than just guessing at a moving average, we wanted to have some math behind it. Bill was PhD in physics, so he had all the math. I actually showed him his first chart. He became a client of mine, and then he started reading Elliott Wave, and he got into it. And the professor became the professor again, and I became the student and the lab worker. And then I finally got pretty proficient. I took a lot of the work that we did from around 1984 through probably 88, 89, that work. I took that and moved it forward and continued. Matter of fact, when I put it in software, I called Bill up, say, hey, Bill, I'm going to put this in software. Do you feel like you got anything, royalties? You feel like you have ownership here? Because I wouldn't have this stuff without our collaboration and things that we did. He goes, no, I don't care. Go ahead. Do whatever you want with that. I don't care about any of that. He goes, I don't even use it anymore. So that was okay. But the theories of what we were trying to accomplish were very, very important to, if you could figure it out. So think about it. If you knew that there was a 60 or 70% probability that a market was going to hold a value and was in an uptrend, was a clear uptrend, and it was pulling back, wouldn't you like to know that? Wouldn't you like to know that 7 times out of 10 you could buy that value and make money? Of course you want to know that. So that's what we were working on, trying to put probability map, and in real terms, it came into anything greater than 50%. Like if you could get to 60 percentile probability that it was going to hold a value, that was plenty to make a trade-off of. Because 6 times out of 10, you're going to be right. It's like any casino, right? They make sure the house odds are slightly slanted toward them. So ultimately, when they get enough players and enough action, that they're going to win because the odds are on their favor. That's all we're looking at here. And that's the same thing we do with the portfolio software. It's all about the math. I actually had the opportunity, I haven't talked to him for a little while, my original partner, Dave, he could be anonymously watching. Hey, Dave, we had a great conversation because one of the things we were working on, Bill and I had done this work. This was going to 1996, I think, when Dave and I first started working on a project. And we worked together for about 4 years or so. And this is what we were taking all these probabilities and starting to put them in and taking all the rule base, and then we were taking the next level and say, what if we did this on 30 stocks or 100 stocks? How do we combine everything together? So we started, but the conversation we had just the other day was intriguing because one of the things that Dave is a very matter-of-fact guy. He says, the math even works or it doesn't. You even believe it or you don't. And if you believe it, you do it, and that's how it works. And we did this work, like I said, way back when, 84 to 88, 89 is when that happened. Then when we get forward, TradeStation came out with a system writer. Then they came out with TradeStation, the platform we know today, and they allowed us to program in there. We're starting to build the models and do things there. It goes to that Pardo book, Robert Pardo book, Building Systems. We actually used his walk forward methodology to backtest and to validate. That was brilliant thoughts. And I've actually talked to Bob and told him, I mean, what I was able to do with his work was phenomenal because it gave us that map, and that's sort of, and the front end of this is what I was talking about. So this is just a little segue before we get into charts of understanding the philosophy, what we're doing, what these things were developed to do, and how incredibly reliable they are. And you're going to have surprises with anything, but the probabilities are really pretty good, which I'll show you in a minute. But that was the goal. Figure out when a trend line was valid, when it wasn't, when the markets were, how the markets were going to react around a point. So a lot of people use moving averages, right? But what happens? They go, well, it didn't hold the average. Well, chances are, if you have these PPMs, you already knew that it wasn't going to hold the average. And that's what we wanted to know. Typically, you get a heads up, maybe 2, 3, 4 bars while it's approaching that value to know that the probabilities are very high that it's not going to hold or it is going to hold. which goes to everything I've talked to you folks about today. If you've stayed this long on this video, as everything that I've talked to you about is really the building that confidence, building all this order around what you're doing so you become very proficient. And you have to realize this has been my day job since 1979. I've not done anything else. I've been head financial analyst, major firm. I worked at Merrill Lynch Research and ran money, managed money there at a couple of different institutions. I worked with major banks for 7 years and managing their books of business and hedging, all that stuff. And a lot of people I know on the planet. But this, all of this has been my day job. I'm very, very lucky. I love what I do to this day. I'm going to be 70 in a few weeks. Love what I do. I love these markets. I love teaching folks to do this. I've done so much education over the years. And, but this whole philosophy of everything, but anything that has the Wavetech on it, it comes from this basis of what I'm talking to you about right now. And that is that the fact that these moving averages have probabilities. And if you understand the probabilities, you can make a lot of money. You make better decisions. And that's what trading is about, is understanding probabilities, making better decisions. Now, some people will use option straddles and and we won't get into options, but you can use options. So theoretically, it's like using a shotgun. You have a broader range of being right. You just have to get kind of close. That's the idea of options. I don't have to be right. I just have to be sort of right. Okay, I'm an ex-option market maker. So you want to bracket things and do straddles and condors and all this stuff, right? But this is just pure looking at markets, trading prices, and understanding probabilities. Okay, so now let's get into one more phase of theory, and we'll go from there. So this is the primary theory here, which is the angle of attack. The angle of attack is actually an aviation concept. You can read a fair amount about aviation and angle of attack. Most of the rules actually apply here. I was the one that came up with what we were actually ended up doing, is because there's lift on the wings. You have to have thrust and lift and airspeed, and you have to have all these elements, which are momentum in the markets. I can make all the parallels to the basic theory. But this chart here basically, and I'll draw some things on here as we go through this, and this will be a deep enough understanding that you'll start. What I'm trying to do here for you folks, that those of you that are, getting indicators, links on the page, those of you that are getting these things so that you understand the concepts, going back to what I said in the opening of the seminar, is that you want to build a confidence and have that belief system locked down, that when you see this stuff, exactly what to do. And when you see that, you become, you can be very aggressive at certain points and time. So back in the trading floor days, I always had all the key levels on the chart, like the market grid. We didn't have handheld computers back in those days. So would have these values that I would go, even in the 90s, we didn't have a handheld computer, right? We still had the brick phones. I used to write into the city, calling the trading desk on my brick phone. So you folks have no idea how lucky you are that you can have one of these devices in your hand and you have a massive computer to do all kinds of really cool stuff. So the point of this angle of attack, and this will be fairly quick. You see the scale, the ppm value, and once you get over 1% of upward slope, then the probabilities at 1%, you actually end up at about a 10% probability that the market will penetrate through a moving average. Typically, you folks hear me talking about we're in trend level. Trend level is anything over 0.25. which puts us roughly at around a 40 to 45% probability of penetrating the average if it's going up, or otherwise around a 60% probability that it will hold above a moving average at that point in time. So if we have 0.25, markets are going to fluctuate. They're going, you're going to get take a look at like a Bollinger Band, or even using the market grid, right? You're going to go up for a couple of days. You're going to trade in R2, S3 on the upside, and you're going to be a certain percentage above a moving average. It's going to come back to the moving average. But this is where the confidence comes in. When it comes back to the moving average and you have a 0.25 plus, and sometimes they're 0.4, 0.6, the probabilities all of a sudden are dropping around 0.6 to about 30% that it's going to go through. So 7 out of time, this is what I was talking about, 7 times out of 10, it's going to hold that value. So if it gets to that value, it might trade a little bit below it, but on a closing basis, it's going to hold. And you see all the time, I talk about some of these rising 10 patterns through the market grid. There's so much theory we could go into. This could be a full-blown college course for a full semester to go through this the proper way, but we're going to hit on a lot of the high points. But what you're looking at is, once these probabilities and some of these markets that we're looking at, when you get out on the our outer metrics, we haven't even talked about multivariant trading. There's so much, folks. It's just crazy. But what we're looking at is, once you get over, typically this would be on a daily chart, okay? You get above 1%, you get 1.5, you get 2.0 plus. There's virtually, what usually happens when you get at that high level of rate of change, of percent change on that moving average, is that the moving average is the lower one, and you're trading up here in value, so you're way above where that moving average is. When it gets to a 0.1, 0.2 or higher, that just means we've got a parabolic curve. So what happens in aviation, if you picture the old biplanes, they can go vertical, but once the power, the momentum runs out, the thing just drops, right? Same thing here. Once you get too steep of an angle, then the market will get X amount above a moving average, and it's going to pull back to the moving average. And as long as that average maintains that upward slope, we're probably going to maintain it. As we get higher and more momentum down, it'll swing around it. And this is going to, I'm hoping that a lot of you have actually been on the YouTube channel. I suspect you have, that you're actually seeing this where the moving averages start to move out. Looks like my favorite bot has showed up. Bear with me a second here. I know. I agree, Kurt. Okay, so my whole goal here today, those of you that bought the indicators, those of you about to buy it, is that you build through some of these concepts. That this was very well thought out. That a lot of these concepts were validated. Literally, Bill and I would go to Bill's office after the markets closed. I was on the West Coast. I was in California at the time. And I would head over to his office about 1:30, and we'd spend till 5 in the afternoon. We did that 4 or 5 days a week. I mean, we were obsessed. I mean, we actually had, I have a U-shaped environment here. I've always worked like this. Bill had the next level. I've had a really big U-shape. I miss it, especially for research and doing, but we had computers all over the place. Even back in 1984, 86, we had IBM AT machines, 6 megahertz, and we speeded up the clocks. But we had a really nice environment. We just sit there and we'd work independently. When we come over, we compare. There were Excel type sheets out there, at the time. And so we would do as much math and everything that we could, just trying to validate all these theories. So the reason why I go through this is I want, when you see these values, when you use the PPMs and you start to understand what's going on, that you'll do that. So I think I covered most of the theory you need to understand here is that there are probabilities. So you would invert this angle of attack if it was going down. Okay, same kind of scenario. And it's interesting that the downward PPM values oftentimes are much more stronger than the upward values. Markets tend to go methodically, trading up. When they go down, they kind of collapse, and the buyers stop, and you see these big declines like what we're seeing right now. Okay, so let's go into the PPMs. Let's try to set up some trades. I've got some ideas on how I'm going to do that with you folks, and then we'll call it quits for the day. So 2 hours, 40 minutes, 52 seconds right now. And there's not very many people hanging out on Twitter. But if you did want to actually ask a question sometime in the next 20 minutes, I'll leave this run, that you'll have the ability, if you want to ask a question, you can do that. You can do it here on the chat line. It's always nice after I talk to myself for 3 hours to hear another human's voice. Okay, so let's go ahead, and we've got some PPMs up here right now. We've got the moving averages, and let's start digging in a little bit here on some things. What market? I've got the S&P 5. I want to go daily. Let me reset this chart. There we go. So what I think we'll try to do here is we'll come back maybe to like September of 21, and we'll run these things. But so you've got the theory. There's one thing I do want to change, and this is on the settings on the let me just oh, I'm sorry. Yeah, on the so there's a setting here I want you to know about. And anytime you're doing intraday, right now this is daily, it's set on default. You want to set this to 4 on each one of these. So you click on the settings in the indicator themselves and set a default, set it on 4. It'll give you a little more in-depth valuation than what's set up. I think I can change these. It just needs to be a project to get focused on. But you set them to 4. Now you'll see the values are out 4 decibels here. And I don't know. I'm just looking here, visibility. Yeah, I'm just trying to see if there's a way to make the values a little bigger. So that won't be as important, but let's do a run. Let's go back. Let's do a replay here. And I'm going to set this back over here to, looks like somewhere in 2021. Let's see. Yeah, August 31st, 21. So that'll be pretty good place to go. Okay, sorry, I've got the had to drink. I didn't realize I was on camera. Got to crank up the Runa. Yeah, so I'm just looking at a couple comments before I go and start this. Yeah, it's all recorded. You'll be able to see the replay here. And I think we're going to try to mock up the trend line. I'm not the timeline. I'm not sure how effective that'll be. We'll see how it goes. It's been a long event. It's like yeah, it takes a lot of focus to do this. I appreciate everybody that's come on. We lost about 100. I think we had about 400 plus there at one stage. But this is just long. Like I said, depending on where you are on the planet, that's something else too. Yeah. Yeah, I understand exactly, David. What time is it now, man? It's getting late. It's almost 6 in the morning, right? So, okay, so let's run this a little bit. I'm going to pause it, but I'm going to set up what I'm going to do here in this final session, and I'll come back up and we'll summarize what we got done today. And like I said, it'd probably go 6 hours. It's just too much, so I'll have to do another one. I'll have some context, and we'll focus. I think what we're going to do, this video should be suffice for understanding what they are and information here. There'll be a video on day trading. I had 3 things planned. I had a video I wanted to cover day trading, I wanted to cover swing trading, and I wanted to cover understanding trends. What I'm going to do, I'm going to show you some of the trigger points on some trades, and we may add in other elements of the indicators since you've seen them all already. We'll just kind of build this as we go. We might run this script a couple times just to get through this, and then we'll call that quits. But we'll see what happens. So let's crank up and see what happens here. So what do we have this on daily? Okay. Yeah, so we'll watch this trade. Let me go full screen so we can see this. If you notice right here, I already want to pause. PPM1 right here on this bar. Let me spread this out a little bit. Right here, PPM1 on that red bar right before we crossed the 10, drop down was at 0.067, so it already crossed first second derivative. We also crossed first second derivative on the PPM2, and what's even more interesting, and this happens often, is PPM3 during this last sequence never got above its first and second, but PPM3 actually pretty much right at the high bar, you saw it take out its first and second derivative. That's the one thing, the trigger I want you to watch for. So you can see how let's let it run again for a few minutes. Now, one of the things that I can do here, and I'm going to stop it, and I just want to talk about it. I'm going to go back to indicators, and we're going to put the fib target on, fib projection. Oh, that's perfect. So now we've got a couple things that happened here. I'm going to just blow this out a little bit. What we had is we get right into the fib target here was 48.0. I'm trying to get the right number here. 1 second. This little thing is right in the way. Of course, I can't get to the value. Okay, so we got right into the upper fib target. We got the PPMs rolling over. Now we're seeing PPMs trying to turn up. We traded below fib target 3 here. That was 43.63 was fib target 3. On this bar here, we got the 43 505. So remember, this is back right now in September 21. Let's start the script again. So we just got some upward projections here on the daily, just reverse. We're not getting any confirmation here from the PPMs. So what we're looking for is market to get above. Here's PPM 1, just got above its first and second derivative. As soon as that happened, we penetrated, went to the 21. We now have upward projections coming in here. See if we can get any further acceleration. And you're going to see this. We got one bar of downward projections. Now we're back into the upward projections. So here we go. Almost there we hit Fib 2. Working on Fib 3. There's Fib 3. And then let's see if we get a rejection right off of Fib 3. Now we still have some upside here. PPM 2 is now trending. It's at 0.35, 0.27 on PPM 1, 0.28 on PPM 1. We're in a full-blown trend to the upside here. And PPM 3 has not gotten to trend mode, but looks like now we're starting to get some things on there. We could throw the webs on here. We could look at this big objective we just got. A big swing up to 5,100. I remember talking about that stuff on the channel. So PPMs are, I'm going to crank this in just a little bit. PPMs turning over. We traded down into the 40 period moving average, went through it. All the PPMs went negative on us. As a matter of fact, let me pause it so you can see this. So here right over here, we got the PPM 1 to go through its first and second derivative. We've got confirmation right here on this bar is when we get confirmation. PPM 2 rolled over. PPM 3 was basically kind of giving the same signals. So we're seeing a little bit of rollover, but we came down in below a pivot. You see these red dots. I'm hoping that you folks can see that easily. So let's run the script some more. Yeah, so when you get the first and second derivative, that's exactly what you're looking for. Here they're starting to break out again, but it looks like more noise. We're getting very close here now to the highs in January. Is that where we are? Yeah, we're in December. December 17th, we have several of our institutional programs went to cash on December 17th. So we're still kind of rolling through. We're going to make obviously a January high. We know here's some fib targets on the upside. PPMs penetrated first, second derivative on that breakout bar. PPM 2 still looking fairly good, but we know that we are at January 12th that this thing's going to get hammered. Off of it's not going to make fib. It made fib 1. Look at this. Here's downward projections now. PPMs all rolled over on that first bar when we crossed over. And now we're starting this decline. Here's new fib projections coming in. We're sitting at the 200-day, just took it out. Went all the way through the fib projections and traded down to, just trying to get to this bar. Let me pause. We got to 42.22 here. That fib target was 43.66 was the target, and we went through that, and now we're seeing the PPMs trying to turn up again, and we kind of know the script on what it looks like here. We could have went to another period and looked at that. Just start the script again. So we got PPMs looking pretty good. This is around the time that we started to try to rally here. If you notice, we just got some Fibonacci projections on the downside. PPMs, though, are all pointing up. All three of them are starting to point up. So we should see a challenge of this 40-period moving average, and we got rejected there. That was the rejection point. Actually, if we ran the cycle finder, that's where the cycle came in. This was the March coming into the May lows here. What's this downward target here is 40.68. We printed on this reversal. Hang on, I got to stop it. It keeps moving on me. We printed down, but if you look at what's going on PPMs, now we're getting a very mixed picture. And this is what we're coming into is this low here was the 41.14. This is running the cash. So we get that bounce into these patterns. We're getting Fibonacci targets, the upside. PPM 1's looking pretty good, but PPM 2 is faded. It's down 0.28. So that means that the 21 period moving average is going to be pretty substantial resistance at that point. And once it gets, if we got a rejection already right here, the high was 44.16. This was pretty much, I think, before the decline was going to start here. PPMs are kind of mixed, nothing really positive, nothing in trend mode. So we turn it back on. Here we're getting the downward moves. Get these big objectives down here. And these are the numbers that we know to be true now, is this downward projection is 39.41, 37.59, 36.47. They seem kind of like, wow, that's way down there, because we were trading at the time at 41.73. And I believe this, if I look at the date. So let's go ahead and run the script again. This is where we're going to get that set up and get that a secondary low. Look at this. Fib 1 gets hit on the upside. PPMs are all accelerating. We got up to the 200-day. We're continuing to move up. Here's 45.75 handle. Here we trade 46.31. Let me pause this. So we got this big acceleration right over here. PPM on this bar that I have marked right now, PPM 1 and 2 and 3 all came in the same way. And let me put something, let me come up here for a second. When you see all three click over their first second derivative at the same time, basically I'm calling this like a view inside the black box. So what you're seeing is when the modeling, when it sees that, it's going to buy that bar. And I believe this probably was the trade. We had a trade on on the futures. I think it was 43.39 or something like that on this rally up, and ended up getting out. But that was the trigger point right there. All three of those clicking in over the averages. You've got probabilities in our software. We actually have another probability map, which is expectation of every trade. So we build a mean expectation for a return, and then we have standard dev of that. So we look at it from what the models have done in the past too. So there's some other math that comes in there. So let's crank this again. So we're getting some downside objectives again. PPM 1 just went through first second derivative right there. PPM 2 is through the first. We're hitting Fib 1 already. PPM 2 is through first second derivative. We're just kind of in this little sideways, but here comes the hit. So we went all the way to Fib target 3. Let me pause this again. Fib target 3 was 42.18. We printed that day 42 even, and then we traded lower the next day. Then we got new Fib projections, 42.54, 41.55, 40.94. We printed almost to the Fib target 2, but we're now seeing the PPMs were negative starting over right over here. We started to see negative PPMs across the board, and then this rolled over, and we had Fib targets down. So when that was happening, where my cursor is right now is where the Fib targets were starting to be projected to the downside right after we got the crossover and all of that. Yeah, it's the first and second derivatives of the indicator themselves. Okay, so let's start it again. So we're trading down to these fib targets. We printed through the fib targets at 4,100. We know we're going to try to rally again here. Here's some upward fib targets that were for 1 bar, and we just continue to get hit here. Now we're coming into the May lows, right? So you got to stop. So this is important. You see this line right here, 40.94. That's your pivot. So if we get back above there, usually tells us we're going to go up toward the 21, the possibility of going up to the 40. This is when I was, if you remember on the channel, I was talking about, I thought we were going to print the 43 handle. We never did. We never got above the 42 handle, and we haven't even brought in the the weekly charts, because that's where the rejection point was on weekly. So maybe we'll do that for a minute. But this, what we're seeing here is this pivot. So we get above there, that we had the pivot coming in, we had PPM starting to turn up again. So let's run the script. We go down and retest the lows, we get the reversal, and then look at this, we get downward projections down to 3,000 coming in. Here's some upward projections. This was the rejection point here. We got up to, I'm getting ready to stop this. So this is what happened, and this was when I was out of town just a week ago. We kept printing, if we look at the highs, 41.68, 41.60, 41.77, the 41.82 was SMA 40. So let's go ahead and run the script. This is where we're going to get rejected, and these downward targets are going to come, new downward targets are going to get released here very shortly. So look at the PPMs. We're going sideways, like into this wedge between the 10 and the 40. This is one of those sandwich things that I talked about. And once you get into this is the decision point. So guess what? 41.90, we got a pivot right there. We've got the moving averages. It looks like this thing wants to break out. And I think I tweeted out while I was gone, it looks like this market is setting up for a potential move up into the 43 handle. That would end up to never happen. All of a sudden, we on that bar, when it got squeezed into the squeeze play there, on that bar, we saw new objectives to the downside, 38.97, 37.90, 37.23. Okay, so run the script again. Here we go, the rejection, boom, Fib 1 hit, Fib 3 hit in 2 days, Gap City, right? And then we're into, that's the last trade. So this is Friday's market. So we didn't, I'm going to add one more element. Let's go in and add one more element here. And I just want to, we're going to add the market grid. And we're just going to come back to about here. I'm going to do a replay, and I'm going to, let's do a replay from here. I'm going to try to expand I think that way this should, I think this will, no, that's not going to keep us. We need, yeah, that's about it right there. That'll get us through most of it. So let's go ahead and run this script again. So you can see we actually got an STX buy signal there. We did rally back off of right here. So what I'm doing is I'm building the suite, putting things in. This is pretty much what you see on the screen every day. And this is the where the market grid's coming in. We have, what's interesting is coming into this pattern, we've got all the PPMs actually turning down here right now. And we've got, we had an STX buy here. We should get 2 days sideways, maybe 3. That's exactly what we got. We actually rebounded from, let's see what the value was, closed 42.01. Next day closed 41.70. Then the following day we closed 42.77, and then we're sideways, and then we'll see what happens after that. So this is that little rally into these fib targets here, right above the 200-day, and then start to get rejected. So I'm just going to keep going crazy here. I'm going to pause this for a second. I'm going to go to indicators, and I'm going to put the webs on the daily now, and we're just going to expand it just so we can see it a little better. All right, let's run the script again. So we start getting the webbing up here. This is what we call a veil top, where it's a rounded top. And so we're just adding things. Now we're back at the 40. We're now trading toward these fib targets on it. On the downside here, market grids kind of expanding. We got RTX buy there, and then just sideways and just collapse right into the fib target. So I'm going to add one more thing down here, and I'm going to add the I'm going to add the 200 indicator down below, the Wavetech 200. And what I want us to see here is just this is something that I've also learned, is that on this 200 is when you start to see the 200 went negative. If you look at the 200 ppm, you'll see that all of the 200 actually ticked down here, and it's been in a downtrend since the 200 rolled over its first and second derivatives. Meanwhile, I'm going to draw something in here. What's happening when you're looking at all these patterns is you're seeing the 200 starting to lose its momentum. And if that starts to roll down, all of these start to roll over, okay? And you see these averages roll out. We know we traded down. This market was still at 3,900, so we know we printed a 36 handle just this last week. So all of this stuff starts to roll down, and then when you get to 200 in a negative mode, that's some serious stuff. That's all I can tell you, because now you've got the major trend. Prior to this, the 200 had an upward slope to it. So there was what I mentioned sometimes, I said this, because of that, the market's seeking that 200. I remember talking about that we're probably going to at least get to the 200. If we can get through it, maybe there's more. We had fib targets, stuff like that there. But as we know, once this happened right here, I'll draw this line up. Let's see if I get it vertical. Probably, I didn't draw it on the right bar, but it's close. So somewhere on this bar here is where the 200 rolled over, and this is the trend that we've been in. And you can see it tried to get over, I'm down at the bottom of the page now, and you're seeing that it's back under first, second derivative here all the way across the board. So let's run the script some more. But it'd be interesting, the 200 right now, let me see if I can get to the values. Yeah, the 200 is trying to get back over. But you see it's starting to roll, and markets are rallying up. And we should see probably a significant, we got above the first, second derivative here. So let's stop that. Just from a signal of the 200, we basically got a signal over here that was negative, and now we're trying to get above over here into this pattern. So you could have probably just used the 200 and caught this multi-week trend here. Okay. Yeah, Nicolo, let me see. If you're looking for data on the right side of the screen, go all the way over to the right of the chart and select the fourth icon. Yeah, I guess you're talking to somebody. That's what I've got. That's how you get this data over here. What I wish they had was a floating box. Would be really good to have. So let me just change the scaling a little bit so we can get it on the page. So this is where we currently are. So let me look at my presentation here and see where we are. Yeah, I'm just going to show you some stuff, and we're not going to have the time to do this, folks. I'm running out of steam. I was up very early this morning, so it's getting long in the tooth for me. But let me just bring this up, and we can talk a couple things here.